We're coming to the end of another week here at Question Time. We appreciate all the questions you've been sending in, so keep that up. Right now, let's check in with Steve Brannon and see what's on tap for Joe Calhoun today.
Hey, happy Friday, Joe. We're doing another recap and update on DARP, the dollar and rates paradigm. So you wanted to get your thoughts. What was noteworthy of the week? And I'll throw out there, I'm a little interested in on rates. Have we maybe hit a cyclical top on the dollar? Is anything kind of interesting maybe going on dollar and the gold? I'll throw those out there. But, what was worth talking about this week when we look at things?
Well, so far it's a pretty dull week. It's not a whole lot going on, to tell you the truth. The dollar was up a little bit this week, up about, I don't know, not quite 0.75%, but rates were flat. I think the 10-year is up a basis point and a half right now. So there's just no change there. And, listen, we think the dollar is peaking, but, it takes time for it to get into a downtrend. I mean, look right now. I mean, I thought it's kind of an interesting week, right? I mean, it's always interesting. I find this stuff fascinating. That's why I do this. The economic data this week we've been getting this kind of mixed view of things. The Citigroup and Bloomberg both have these economic surprise indexes, which have been measured, hey, how the report's coming in relative to expectations. And those have been falling. But they started to pick up a little bit now. I think they may have hit bottom. So it's kind of interesting week. We got some data that was like, wow, that's really not very good. The retail sales number was really not that great, up 0.1%, I think it was. And, retail sales have not been that great for a while. But all that's happening there is that they're coming back down to the pre-COVID trend. And so they're printing sideways until they get there. Personal consumption numbers have been quite a bit better. Personal consumption, has a lot of services in it. So, travel and things like that you don't see in the retail sales numbers. So people are still spending. They're just not spending on stuff. They're spending on, I don't know, experiences, if you want to use a more modern phrasing. So, yeah, the retail sales number was a little disappointing. But on the other hand, we got Empire State Manufacturing Survey was better than expected. Still negative a little bit, but it was better than expected. The Philly Fed came out, was a little bit less than expected, but still positive and above zero. So those things, on the economic side, I think were kind of interesting. And on the negative side, we did get, well, I guess I'll just go through all of them. Building permits and housing starts were lousy. Not exactly shocking. I mean, interest rates are where they are, mortgage rates are where they are. So, the housing market has been kind of tough. No real surprises. The existing home sales this morning were kind of flat. So, and inventory is starting to build a little bit, which is a good thing, actually, and especially in existing homes. We didn't have any inventory. But the building permits and housing starts are important because they feed directly into GDP and the residential investment piece. So if those aren't doing well, then it's going to have an impact on GDP. But you did get, to flip to the other side, you got a good industrial production number up 0.9. And a big chunk of that was manufacturing, which is the biggest part of that index, was up 0.9. You did see a rise in utility output too, which we usually kind of discount because utility output can vary a lot depending on the weather. It was up 1.6%. I don't think that was AI demand. Maybe some of it was, but I don't think AI demand raised utility output 1.6% in 1 month. I don't think that was it. So some of that has to do with hot weather. So that doesn't really mean all that much as far as the economy is concerned. And then today we got global PMIs, which were all better than expected. The global PMI, the S&P global PMIs for service and manufacturing were both better than expected. And the composite, of course, was better than expected too. So, I'm kind of a mixed view on the economy as far as the data is concerned, the way the data is coming in. I think that's why you got nowhere with interest rates. You got some positive stuff, you got some negative stuff, and they just cancel each other out. But that's an improvement because the data had been coming in less than expected pretty consistently there for a while. So in a way, getting some really mixed data is kind of an improvement. Look, I don't know. I'm always of the opinion that good news is good news. And there's people out there, oh, well, we don't want the good news to be too good because then interest rates might not go down or the Fed might not cut. I would prefer the Fed not have to cut. So I would prefer the economy not be headed for a big slowdown. So we'll see how that goes. Market-wise, again, there wasn't a whole bunch going on this week. Look, we had kind of an interesting day yesterday. Two stocks that are very AI related, Supermicro and NVIDIA, both have big reversals on the day. They were up big in the morning because of some news about orders and so forth. I think it may have been Elon Musk actually talking about that they were going to be some of his suppliers for, I guess, his AI company. And so the stocks popped in the morning. I think NVIDIA was up like 3% in the morning, and it closed down. And Supermicro did the same thing. Started up big in the day and closed down on the day. Now, I'm not a huge fan of technical analysis, but there are a couple of things in technical analysis I think that have been very good to me over the years. And both of them are candlestick charting techniques from Japan. What we got yesterday in NVIDIA and Supermicro is what's called a shooting star. And those things also generally indicate local tops. Now, it could be a long-term top, but it's some kind of top. How much it's going to be, I don't know. And I would just say that if you look at some of the relative strength indexes on those stocks, they're way overbought. So getting some kind of correction will not be a shock. The other one, by the way, which I don't have an example of that because we haven't seen one, but the other one is called a hammer. And it's kind of the opposite of a shooting star. It's where a stock would open up down big and then close up. And that tells you that you run out of sellers. In both cases, it's kind of a supply and demand thing. If you get a shooting star, you ran out of buyers. If you get a hammer, you run out of sellers. Anyway, they tend to mark local tops and bottoms. And I thought that was kind of interesting yesterday. For the week, though, value stocks did pretty well. Small and mid-cap stocks did pretty well. But, they were terrible last week, so just catching up a little bit. REITs were flat because interest rates didn't do anything. Growth stocks lagged a little bit. Like I said, value stocks did outperform some. And I think, too, maybe somewhat important, I think, is that international stocks stabilized. You'd had this European sell-off based on politics, which I don't think is really nearly as big a deal as people think it is. Look, I don't know, maybe the more right-leaning parties do gain some ground in the French elections. But they're not going to jump out of the euro. They're not going to do any stupid stuff because politicians like to get reelected, and so I don't think they're going to do anything to jeopardize that if they do get in. So I don't worry about that stuff too much. But Europe was up on the week, and emerging markets actually had a very good week too. Mostly Latin America starting to recover from their election-related things. Mexico and so forth starting to stabilize some. So it was kind of an interesting week. Even though there wasn't a lot of movement. And certainly no change in our DARP in the dollar and rate paradigm. Nothing changed there. Just everything. Look, I've said this before. I don't know how long this is going to last, but you've been going sideways, trending sideways on those things now for 18 months, getting nowhere, no up, no down, just flopping around, doing nothing. It's hard to pick a direction because you don't, to kind of make any tactical changes because you don't know which way things are going to go. We have a guess, but we don't invest based on guesses. So. Like I said, nothing changed this week. It was there was some interesting stuff, but really kind of a dull week. And we had a nice holiday in the middle. So we got a day off, which I worked. So not really a day off for me. No days off for Joe. So that's it. Listen, we're going to watch our Panthers tonight and see if we can win a Stanley Cup. They're really starting to get me worried here because they were up 3-0. Now it's 3-2, and we're going to play Game 6 in Edmonton. And Edmonton has outscored us 16-3 over the last 2 games or something. It's been pretty embarrassing. So we'll see how that goes. But hopefully we'll get us a Stanley Cup back to Florida this weekend.
We want you to be part of Question Time, so put your questions for Joe in the comments section down below.